Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I'm Namita Mane. In today's video, let us solve an example of amalgamation of companies. In my last lecture, I have explained you the meaning of amalgamation, what is purchase consideration, methods of purchase consideration, types of amalgamation, that is amalgamation in the nature of merger, amalgamation in the nature of purchase, then methods of accounting for amalgamation. So that in the description box I have shared the link of my part 1 of amalgamation of accounting. Do watch that video and then watch this video, that is part 2. In this video, we are going to solve the example of amalgamation of companies. So this is the example on the screen. The following is the balance sheet of A Limited and S Limited as on 31st March 2024. So this is the balance sheet as on 31st March 2024. Liabilities and assets. So liabilities of A Limited, liabilities of S Limited are given as follow. Then assets of A Limited, assets of S Limited is given. Now the additional information is provided. The above companies, that means A Limited and S Limited, agreed to amalgamate and a new company, that is V Limited, is formed. So A Limited and S Limited is the selling company, means the transferor company, and new company is means they amalgamated and a new company, that is V Limited, is formed. V Limited is a transferee company, okay, means the purchasing company is formed. Now a V Limited takes over the assets and liabilities of both the companies on the following terms. So V Limited is the purchasing company. So it is taking over its assets and liabilities of A Limited and S Limited on the following terms. So what are the following terms? Building of A Limited is accepted at book value, means the buildings of A Limited is 80,000. It is accepted at the book value. So whatever assets and liabilities value which you can see, for example machinery 46,000 of A Limited and S Limited 42,000, this value are called as book value. So building of A Limited is accepted at book value and the machinery is machinery at rupees 40,000. So machinery of A Limited is actually of 46,000. Okay, but B Limited took the machinery of A Limited at rupees 40,000, and the other assets are taken over at 10% depreciation, leaving buildings and machinery. Remaining assets, stock, debtors are taken at the 10% depreciation. Okay. Now, next is all the assets and liabilities of S Limited. Okay, S Limited and A Limited are taken over at the book value. So whatever assets and liabilities of S Limited are there, it has taken over at the book value, and A Limited remaining assets, means the liabilities, are taken at the book value. Next, C point, both the companies receive 10% of the net valuation of their respective business as goodwill. So whatever is the valuation, net valuation, the remaining amount, on that 10% they have received as a goodwill. Next, the entire purchase price of both the company is paid in equity share of rupees 10 each. Means whatever is the purchase consideration, okay, of V Limited, so that V Limited has decided to give the purchase consideration to both the companies A Limited and S Limited at rupees at equity share of rupees 10 each. Okay, now what we have to do, we have to prepare the means close the books of A Limited and S Limited and give the necessary journal entries in the books of B Limited. So A Limited and S Limited Limited is the selling company. It is called as transferor company, and V Limited is a new company which is formed. It is a purchasing company that is called as transferee company. So here, first of all, we have to how to solve this example of amalgamation of the company. First of all, student, you have to read all the details which is given in the balance sheet and additional information. Based on this additional information, we have to prepare a statement of purchase consideration. Through this purchase consideration, we can identify, or we come to know that at what price B Limited has purchased the company of A Limited and S Limited. After preparing the statement of purchase consideration, we have to close the books of A Limited and S Limited. Why? Because this both the companies are liquidated. Okay, so we have to close the books of A Limited and S Limited. So to close the books of A Limited and S Limited, we have to prepare the following accounts. Okay, ledger account. First, we have to prepare the realization account, then equity shareholders account, and V Limited, that is the purchase company account. Okay, same for in the books of S Limited, we have to prepare this following accounts: realization, equity shareholder account, and V Limited, that is the purchase consideration purchase company account. Okay, so like this, you have to prepare the following accounts. So in order to close the books of A Limited and S Limited, separate accounts we have to prepare, and on the top you have to mention in the books of A Limited and in the books of S Limited. Okay, so after preparing this account, first we will find the purchase consideration. Okay, so to find a purchase consideration, basically there are four methods to find a purchase consideration. One is lump sum method, second is net asset method, third is net payment method, and fourth is the combination of net asset method and net payment method. So we are going to use the fourth method to find the statement of purchase consideration. So for that, prepare this table. Okay, discharge, in which order we are going to discharge the payment, then A Limited and S Limited, net asset taken over A Limited and S Limited. After preparing this account, first we will take all the assets and liabilities which are taken by the B Limited, okay, of A and S Limited. So first, in the net asset taken over, we will see here in the additional information they have said that B Limited takes over the assets and liabilities of both the company on the following terms and conditions. The first condition is what? Buildings of A Limited is accepted at book value. So how much is the buildings of A Limited? That is 80,000 rupees. So here write buildings of whose building they have taken. B Limited has taken A Limited. So write 80,000 rupees. S Limited does not have any buildings. Leave it. Then machinery at rupees 40,000. So machinery rupees 40,000. Okay. Now other assets are taken over at 10% depreciation. So other assets of A Limited has been taken at 10% depreciation. So assets of A Limited, okay, stock is, see, buildings they have said that take it at book value, so we took it at book value. Machinery they said to take at rupees 40,000, so here 40,000 we have taken. Okay, now other assets are taken over at 10% depreciation of A Limited. So what is the remaining assets? Stock and debtors. Stock is how much? 80,000 rupees. So we have to take stock at 10% less 10% depreciation. Okay, so 10% depreciation on 80,000, we get 72,000. Okay, 72,000 as the remaining. How we got? See, 80,000 divided 80,000 multiplied by 10 divided by 100, we get 8,000 as the depreciation. So from 80,000 less 8,000, we get 72,000. Okay, now here write 10% less 10% depreciation. Okay. So after doing 10% depreciation, we get 72,000. Next, debtors 40,000. Again, for this also, we have to take it at 10% less. So debtors is how much? 40,000. So 10% of 40,000, we get 4,000. So from 40,000 less 4,000. So total debtors is taken at rupees 36,000. Okay. Now, next point is all the assets of liability, all the assets and liabilities of S Limited are taken at the book value. So of S Limited, buildings is not there. Okay. Then machinery is taken at the book value. Means how, book value means the balance sheet value. Okay. Machinery 42,000, stock 10,000, stock 10,000, then debtors 12,000. Now what is remaining? Cash. Cash we have to take at the book value. Cash is how much? For A Limited, cash is 20,000, and for S Limited, cash is 6,000. Okay. Now total all these assets of S Limited, total we get 70,000, and assets of A Limited we get 2,48,000. Okay. Okay, so now we got all the total of assets of S Limited and total of assets of A Limited. This is the total of assets of A Limited and S Limited. Now from these assets we have to less the liabilities. Less the liabilities. Okay. Now for liabilities we have to take the liabilities of S Limited and A Limited at the book value. Okay, so liabilities, that is what in the liabilities check we cannot take share capital. Okay, then debentures, this journal reserves, dividend equalization reserves are the reserves which will go in the equity shareholders account. So remaining liabilities are 8% debentures, employee provident fund, and creditors are the liabilities. So less the liabilities of A Limited, that is 8% debentures, 8% debentures of A Limited 20,000. For S Limited there are no debentures. Then employer provident fund 4,000. Employer provident fund EPF, employee provident fund. So employee provident fund of A Limited is only given, that is 4,000. For S Limited there is no employee provident fund. Then creditors of A Limited is 50,000 and S Limited is 30,000. Creditors 50,000 and S Limited 30,000. So now here total of liabilities of S Limited becomes 30,000 and total liabilities of A Limited is 74,000. So this is the total of liabilities. Okay. Now from this assets, the total of assets and total of liabilities we have to less from here. So 2 lakh from 2,48,000 less 74,000 we get 1,74,000. Okay, from 70,000 less 30,000 we get 40,000. Okay, so this is the total of net asset taken over. Okay, now from this net valuation, okay, from this net valuation we have, see here C point, both the company received 10% of net valuation of their respective business as goodwill. So this is the total net valuation of A Limited and S Limited. From this 10% we have to give it, company has received as a goodwill. Okay, so 10% we have to add, that will be called as goodwill. 10% valuation. Valuation. Okay, so 10% of 1,74,000, sorry, 10% of 1,74,000 we get 17,400 and 10% of 40,000 4,000. Okay, so now total purchase consideration will be of S Limited will be 40,000 plus 4,000, 44,000, and A Limited is 1,74,000 plus 17,400 we get 1,91,400. So this is the purchase consideration value. Okay, this is what purchase consideration price which V Limited has given to, which A V Limited is going to give the A Limited and S Limited. Okay, now see here the entire purchase price, see the D point, read the entire purchase price. So A Limited purchase price is 1,91,400 and the purchase price of S Limited is 44,000. So the entire purchase price of both the companies is paid in the form of equity shares of rupees 10 each. Okay, that means this payment of 1,91,400 V Limited has given to A Limited in the form of equity shares of rupees 10 each, and V Limited has given 44,000 to S Limited in the form of equity shares. Okay, so discharge of this payment has been made in the form of equity shares. Okay, so equity shares discharge in the discharge column, right? Equity shares. Now 10 at rupees 10%. So here A Limited shares is how much? Number of shares is 1,000, 19,000, 19,140 into 10. So 1,91,400. For S Limited, the number of equity shares is 4,400 into 10. So total we get 4,400. Okay, so you can see the values are being tally both the okay. So S limited and A limited both discharge and net asset taken over, both the sides are tally. Okay. Now how did I got this 4,400? Okay. I have divided by 10. 44,000 divided by 10, we get the number of equity shares. Multiplied, we get the share capital. Okay. Now statement of purchase consideration is done. Now we have to close the books of A limited and S limited. So prepare realization account, equity share account and V limited. Okay, first we'll close the books of A limited. In the realization account, in the debit side, we have to take all the assets. Okay, and in the credit side, we have to take all the liabilities. Now in realization, you have to take the assets at the book value. Okay, and in the credit side you have to take the liabilities at the book value only. Okay, now in the realization, in the debit side, take all the assets of A limited. Okay, buildings is how much? 80,000. 80,000. Then next machinery 46,000. 46,000. Next stock, you will not take the values which are given in the purchase consideration. Okay, because these purchase statement terms and conditions are made by V limited. So in to close the account of A limited, we have to take the assets at the book value. So stock is how much? 80,000, debtor is 40,000 and cash is 2,000. So stock 80,000, debtors 40,000, cash rupees 20,000. Okay, now in the credit side, take all the liabilities. 8% of debentures, 8% of debentures were taken. Write it in the debentures were 20,000. Then employee provident fund, 4,000. Then was creditors 50,000. 50,000 is the creditors. Okay, now here in the realization, the purchase consideration value should be here. Okay, so here first you will write all the assets. Here you write by V limited. This entry will be of purchase consideration. PC means purchase consideration, 1,91,400. The next effect of this purchase consideration of 1,91,000 will be given in the V limited account. It will come as to realization account. To realization, that means PC purchase consideration, 1,91,400. Okay, so first effect of purchase consideration is to be given in the purchasing company V limited to realization account 91,000, 1,91,400. The second effect is to be given in the realization account in the credit side, that is by V limited 1,91,400. Okay. Now, next in the equity shareholder account, you will write in the credit side by equity share capital of A Limited. How much is the share capital of A Limited? 1,20,000. 1,20,000. Okay. Then in the credit side, you will write the journal reserves and dividend equalization reserve. Journal reserve 30,000, dividend equalization reserve 42,000. So all the reserves is to be transferred to the equity shareholders account. So here by journal reserve, 30,000 by dividend equalization reserves. Dividend equalization 42,000. Okay. So all the reserves we have transferred to the equity shareholders account of A Limited. Now next here, of V Limited, how much was the equity shares of V Limited? How much equity shares the V Limited has given to A Limited of 1,91,400. So here you will write two equity shares in V Limited, 1,91,400. So number of shares were 191 no, 9 19,140 into rupees 10 each. Okay. So now next second effect of this entry will come in the credit side, that will be as buy equity shares, buy equity share in V Limited, 1,91,040. Okay. So now all the entries we have passed in the books of A Limited. Okay. So now close the books of A Limited. So close the realization account, debit side and credit side. So you will see the realization account of debit side is more, 2,66,000. So difference is of 600 rupees. So that means we have loss on realization. So this loss we have to transfer to the equity shareholders account. So by equity shareholder, loss on realization, loss on realization. So loss is 600 rupees. Now we will see that it is getting tallied. Okay. Now this loss of realization we have to give the second effect in the equity share holders account. It will be as to realization in bracket loss. Loss is how much? 600 rupees. Now if it close the equity shares holders account, the total will come same, that is 1,92,000. 1,92,000. Now here the amount will be close the account of V Limited. It will be same. So we have closed the account of A Limited. Both the side debit and credit side are getting tally. Now we have to close the books of S Limited. Same the way we have did for A Limited, same entries we have to give in the books of S Limited, but the amount will be, the values will be changed. In the realization, we have to write all the assets. In the realization account, we have to write in the debit side all the assets of the S Limited and all the liabilities of S Limited in the credit side. Okay. So realization account, assets of S Limited, machinery, stock, debtors and cash. The value should be at the book value. Right in the debit side, two sundry assets, machinery. Machinery is how much? 42,000. Stock 10,000. Debtors 12,000. Cash 6,000. Okay, so all the book values we have written in the realization account of S Limited. Then liabilities, only creditors are there of S Limited. Okay, see in the balance sheet. Share capital we have to take in the equity share account. So there are no liabilities of S Limited, only creditors are there. Creditors 30,000. Right, creditors 30,000. After that we have to write the purchase consideration, at what value V Limited has taken S Limited. So that this entry will be of PC, purchase consideration, at rupees 44,000 it has taken. Okay, now this next effect of this purchase consideration, it should go in the V Limited account, that will be called as to realization, PC. PC stands for purchase consideration 44,000. Okay, now next, how much is the equity share holders of V Limited in S Limited? 4,400. So in equity share you will write 4,400. So 44,000 equity shares. The second effect you will give in the credit side of the purchase consideration. In this if of purchasing company, in the credit side it will be called as buy. You're right, 44,000. Okay, now in the equity shareholders account we have to transfer all the reserves. So here there are no reserves of S Limited, only transfer the share capital, equity share capital of the company. By equity shares, share capital. How much is the equity share capital of S Limited? 40,000. 40,000. Now here all the entries we have passed in the books of S Limited. So close the account. Here debit side of realization, add the total. Now credit is more than the debit. Okay. So total becomes 74,000. So here there is difference of 4,000. So right here to equity, the loss is to be transferred in the debit side of the equity shareholders, and the profit we have to transfer it to the credit side. So to equity shareholders, that is profit on realization. Okay, profit on realization, profit is 4,000. And now here the second effect you will give in the credit side, transfer the profit to the credit side of equity shareholders by realization, that is called as profit is 4,000. So if we total, if we close the equity shareholders account, the both the side credit and debit side is same, that is tally. Here also realization account is getting tallied. Now close the account of purchasing company, both the sides are getting tallied. So here we have closed the books of S Limited, okay, by creating realization account, equity shareholders account, and V Limited. Okay, now we have closed the books of A Limited and S Limited, we have closed, and now pass the journal entries in the books of V Limited. So to pass the journal entries, in this way you have to pass the journal entries in the books of V Limited. V Limited is the purchasing company. So first we have to give the purchase price, okay, then what are the assets we have realized, and from there how much is the liabilities, okay, then purchase price of S Limited and assets and liabilities of the S Limited. Okay, so in this way you have to pass the journal entries in the books of V Limited based on the account which you have created here. Okay, so in this way you have to solve the example of amalgamation of the company. I hope you have understood today's session. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.